QQQ range that looks a little bit distributive. However, I think there's a lot of rotations that are happening under the hood that I'm going to be talking about here in a moment. A few of those being in the discretionary sector, a lot of those being consumers, right? There's a few areas in the market that I would like to trade, but I do think we need to have a lot of these earnings candles digest themselves just a little bit, right? We've talked about the previous rotations that would happen within the energy sector, right? We go over to XLE, and we have a major V-shaped recovery that happened leading into that December through January window. December OPEX is actually what initiated this after we had the sweep of this low, right? And then what happened was this carried its way higher after these major overextensions in consecutive day-by-day capitulating trends that resulted in a really nice move back to the upside. Now we're looking at this thing being reevaluated within swing low, swing high discount. That's typically where you would find your first daily high or low off of. However, when you go into some of these energy names like Oxy, very ugly candle within Oxy. If you go to the 15-minute, obviously there was some sort of big time buyer somewhere within this day, right? The volume is very unusual and it was very consistent throughout most of the day, but we did have some volume spikes and very, very diminished candle spreads, right? Which obviously we could conclude that, there could potentially be a hidden buyer within that candle. I'm not going to obviously trade that. Things need to digest properly. And if we go over into some of these other earnings candles within the energy sector, a lot of this needs some digestion, right? CVX was another one, really ugly candle within CVX, right? I don't necessarily know what's going to happen off of like this higher time frame trend line and whatnot. And yes, we did get a higher low here, and then we could technically get an internal higher low where it obviously pulls out you have a 1, 2, and then like your third low of accumulation. That was a sweep of all of these weekly levels right here, right? And then we got a higher low on top of that. Could we get another one? Possibly, but we need to let things digest within the energy sector. So that's not going to be a focus of mine for this week. I'm probably just going to let this one go until we get a little bit more into past this week, and I guess we'll see, right? Now with QQQ, we did swing some puts, so those are obviously going to open up. In my opinion, I think we are going to get a gap down, and we're going to get a weekly opening gap from the downside, right? So we do have data on Thursday, right? If they were to start really bidding the market lower into the point where we could obviously get some sort of draw on liquidity back into that new week opening gap, that could be an absolutely insane trade in my opinion. I don't necessarily know when all of these distributions are going to result in a lot more of a sharp mark down that leads into like a break of all of these supports that we've been trying to build out on NVIDIA. Obviously Apple here with a really disgusting looking daily candle. If you guys go into the weekly candle, that could be a 1 week LPSY. I'm going to talk about that here in a moment. Microsoft is sitting at a major daily / weekly support level with a gap left for the upside, right? So there's so many charts that are kind of diverging from one another within the tech sector, and we don't necessarily know which ones are going to be more of the vulnerable long side trades or which ones are going to be more of the vulnerable short side trades. I would personally say Apple is going to be a top focus of mine for the short side trade. Obviously, I would like to see some sort of higher low or lower high. I'm sorry, some sort of lower high within a lot of this range that led to obviously the breakout. That breakout was very strong and easy just through those Vanna Charm flows being at their strongest point in time when we actually did find the breakout, and then that led to a major failure after a very exhausted top within this chart, which then led to a consecutive week by week sell-off that pushed us down into the 220 level, right? We obviously took out a lot of the daily support off of this 220 level. We swept this previous higher low that led us into the breakout. And then that was when we had our really nice reversion back to the upside leading into the report. And then they obviously distributed it once again. And now we're obviously looking at a candle that we can play off of here now. If we do get a gap down, I'm going to be watching this one for a fade. If the bid back, say we get a gap down, right, and then it catches some sort of like small short-term bounce, right, and it's kind of climbing its way ever so slightly higher in a very slow way, not a lot of volume, not any true strong price action, I'll probably be looking at the overnight gap range if we don't get a gap down and we do get a retracement, which is from the Thursday close into the Friday open, which is technically the gap up from the earnings that resulted in a sell through all of that range. If we could get some sort of higher low within like these imbalance candles or beneath the Thursday low with a really weak looking hourly candle, I think that this could be a really nice opportunity to trade short one again. I already have some puts from Friday and I still have some puts from Friday, but I trimmed off most of those into the Friday close. More of my short side vehicle as of right now and where more of my size is at right now is actually within QQQ just because of the really reliable risk levels, just because of the targets that we have in mind off of like this huge candle right here that is very, very, very important. And yeah, so let's go into QQQ now. We'll talk about how everything was behaving throughout most of this week, right? How we had a major draw into this bear gap, right? Or into this previous bull gap, I'm sorry. And that led into obviously some really nice reversion back to the upside throughout most of FOMC. And we were pushing our way higher from the bid that was appearing through the dark pull down here within these gap ranges, right? And then we had a lot of room back to the upside with this weekly opening gap being a major imbalance within the chart. We had a lot of opportunity as far as data goes, as far as tech earnings go towards the end of the week for them to be able to continue the distribution. And then that distribution obviously continued within a 3 higher high 1 hour schematic. The first notable seller being actually, it wasn't even a true seller, but it was more of just an exhaustion type of look was actually on the Tuesday open, right? And then we obviously carried our way ever so slightly higher. The Thursday opening range candle was very weak, right? And we got a little bit of recovery into that close. And we got our final gap up, which closed the bear gap. That's also where a dark pool seller was starting to pile up. And if you go to the SPY, that was also, if you guys take a look, it was simply just off of the previous consolidation before the FOMC markdown, right? So technically from the top end of the chart, you could call this the gap fill candle as well as the breakout failure candle, right? This was the top of the trend that obviously failed into a new week opening gap from the downside. However, we did not fill enough of these areas on the chart that still have a lot of strong big orders at. There's so much money being built up within a lot of these gaps, and we're still playing with like a lot of this internal structure around here, right? So if we start to get the failure beneath these levels, if we start to get the failure beneath all of like these daily supports, and this gets a really ugly daily print to the downside, we obviously know where we're going with these gaps remaining unfilled, right? We have a big time buyer around 590, and we also probably have some other ones down towards the low 580s. So those are very important areas to think about as a short side target, right? I would obviously rather be a little bit more short and just shorting weaker pops than anything. But we could get a really nice long side trade if this were to be an extensive gap down to open up the new week. Now we'll go into more of the like equity market, and we'll talk about some of these other names that look really, really nice. I hear a lot of chatter about like Cramer wanting to buy Starbucks and whatnot, and how people want to short it. And I don't allow my thesis to be revolving around what Cramer says to buy and sell. I really don't care. I think Starbucks looks fantastic as long as we can remain relatively strong throughout most of this range beneath the bear gap, and we get a lot of high tight consolidation. This is undoubtedly a little bit overextended. However, with a lot of these names, this has been one of the stronger themes within your large and mega cap market. Has been a lot of the discretionary names, a lot of like your consumers that fall into a similar industry, right? We actually just traded McDonald's as of last week, which is another other name I'm going to be watching, with some sort of kicker candle off of defending this day right here on January 27th. That was a really nice, strong day. What we did was we popped down, we filled the gap. We had a lot of basing happening underneath this daily support level at 283.71. Once we got back above that, that's whenever it showed a really nice, relatively strong day on January 27th. You go over to January 27th, and this was a huge gap down that was obviously caused through tech, through NVIDIA. So that was a really, really notable day for a lot of the market, right? It showed us some relative strength, a lot of the relative weakness and whatnot. So we go over into the other one, Nike. It's another trade that looks really, really, really good. A chart that looks absolutely insane in my opinion. We initially got our first mark down, followed by the 3 lows of accumulation that were being built before the Bill Ackman stake that was announced on Nike. And then that led to really nice reversion back for the upside to fill most of the gap. However, we left behind a little bit, and then what happened was they just redistributed this thing on a big time like daily level retest right here, daily/weekly level retest right around here. And then that's what obviously led to the recorrection back lower. However, we made a new low. That new low obviously could not displace lower beneath the previous support. And then what happened was we got a really nice pop back to the upside in our previous consolidation range. So if we were able to just digest this range really properly and formulate some sort of high type flag on the hourly or on the daily, maybe let the EMAs catch up a little bit, or maybe we get above this range, that's going to be a really nice opportunity to roll profits into that trade once again. Like I said, a lot of the discretionary sector looks really good, really strong. You go over into other names like Starbucks, you go over into some of the other names like Lulu, and a lot of these look really, really good. So Lulu could also be another potential trade. However, I did probably miss my fill on this one. I don't really like filling right into a bear gap. I just don't think that's the smartest decision out of all, right? But if we do get some sort of clean digestion off of this area on the chart, that could also be a really telling sign as to where these other names are going. With Starbucks, all this really is, guys, is just kind of formulating what we did with like Lulu, how you're getting really low volume retracements off of the bottom of the bear gap, which then result in a really nice hold of like equilibrium, or if it wants to pop down and retest and then start building out another little range that we could trade off of, that could be a really nice opportunity. So that would be Starbucks. We'll now go into some of these other names. DraftKings I'm already done with. We'll talk about INTC here real quick. This is one of those names that just is not ready yet. It's really not. Could this be an accumulation? It totally could, but would I rather see a new low, and that new low being soaked up, something similar to what I just talked about with Nike? I'd probably rather see that. I would probably rather see this take out the external sitting down here that has all of these lows built up above the ultimate low, I should say, at 1852, and then we get some sort of like terminal shakeout or some sort of red to green type of candle, some sort of spring, and then a lot of consolidation, and then that would result in this being another really nice accumulative looking chart with really good risk reward back for the upside. Not, like I said, it's not ready yet. One of the better looking semiconductor names, or just some of the overall better looking ones, are QCOM, but we have earnings over there. MU is a dip buy that does have my interest, but it's just not ready yet. We still have a gap all the way down here on MU as well, and we have a lot of daily liquidity that's built off of like 84 to 85. So if we were to take that out and put in a shakeout off of like 84 to 85, and then eventually pop back above, fill the gap, and then start getting higher lows, that would be an extremely good reversion trade back to the upside if we get some extensions away from this bear gap right here. I think that one would be something that I would throw a lot of money in. So yeah, that's MU. Like I said, just not a trade that's ready yet, but just have it on your radar as a side watch. That would be an A++ type of setup going on over there. Now we'll talk about Tesla here real quick, because this chart is really interesting to me, and I don't necessarily know what's happening here. Is this a reaccumulation, or is this a distribution that's essentially going to fail? This whole entire previous resistance trying to turn into a support, and the earnings never met the implied move, and we never really did anything with the earnings except pop a little bit higher, and then we got the breakout failure candle here, and this range has been really coiled up for about 1, 2, 3, 4, 5, 6, 7 weeks here. Obviously, leading into these very critical levels that are extremely important as to where things are going to go moving forward, lead to a lot of digestion. You get a lot of early flow. That premium gets cooked up, and then eventually the move is made after however many weeks of digestion are needed for a really strong, constructive-looking chart. Obviously, there's a lot of digestion that's needed after such a crazy move to the upside. I mean, guys, when you're thinking about from the earnings into the into the election, into the inauguration, this thing is up literally, not even the inauguration, into December. This thing is up 130%, right? That's 56, that's 39 trading days and 130% move, right? We could obviously just be able to tell just through that itself that this is extremely overextended to the upside. Does that mean that it's ready to fail off of this high? No, not necessarily. But the fact that we got this breakout failure, as well as the earnings candle high sweep and in the close beneath, as well as now trading beneath the previous all-time high, that's very, very weird to me as of right now. So I want to see what happens, and I want to see the behavior here with Tesla as we get into the new week. I don't really want to see too extensive of a gap down, or there's no point. However, what I think could happen is that we could obviously push beneath all of these lows throughout this range, and that would be my short side trade type of target here. We have the lowest low being right here, right? 373. I'm not saying that that has to necessarily be the target. However, we have a lot of areas to think about targeting. And if we get daily candle closures that are ugly beneath this level, I feel like distribution is on its way for a little bit of time until we could fill some of these downside gaps that we have beneath us here. Or at least just taking out this daily base that's going on here that doesn't have enough fuel essentially to break it out, right? Sometimes whenever you're looking at the upper end of the chart and you don't see enough fuel and then you see the daily base beneath you, they typically need to take that out and stop trade to get their hands on more inventory to be able to push higher, right? So with that being said, that's Tesla. I want to see, I'm not going to go all gung-ho with this trade. I'm not going to just take a trade right off the open. I want to see what happens with this one. I want to see if they can start like holding this as another daily higher low from the first initial low into a higher low into one more, and finally last one. But if we get a gap down and then we get a lot of like weaker consolidation or small pops, I think that this one could obviously be a very shortable name here for a little bit of time. So yeah, that would be Tesla. Now we'll go into some of the relatively strong tech names. I really do like the Amazon chart still, and the fact that we recovered the entirety of the last week's new open gap down is just really crazy to me. I don't see this chart really stopping for any sort of reason unless we get some serious selling going on within just the general market, right? Which would obviously affect Amazon likely as well. But if we do get a lot of, I mean, we do have earnings here February 6th, so I'm probably just going to let this one go into that earnings, and then we'll see what happens with the earnings report. But really strong tech name over there. Google, same thing going on over here. This is just a really nice consolidated base here on this previous high. This was a previous underperformer, right? So we have to take note that this name has not been strong throughout most of the year. However, we have really strong volume patterns, and we can essentially say that a lot of this range is fully absorbed, and now we have got a weekly successful candle closure that is one of the strongest that we've had ever since this top throughout this into that December OPEX, right? So that's your OPEX candle, right? So whenever you're consolidating above a previous high and you're holding that high and then you close near your highs on the next following like couple weeks afterwards, it's a pretty strong tech name, right? We do have earnings as well in this one. We have earnings in a lot of areas, so the scan's just going to get more and more difficult. Now I'm going to go over AMD because I think that there's a really nice trade opportunity available to us with AMD for the future, as long as we just get a mark up, right? So if we get a flat report and we don't meet the implied move, could it be a decent little flush trade? Probably. Will it be necessarily something that's like has a super reliable risk level to play off of? Probably not. However, if we get a really nice bull peg that has a lot of strength behind it, meaning there's a lot of volume, it's a healthy spread, we get a decent gap up, and then we get a lot of high tight consolidation, I think AMD would be technically in a change of hands. Obviously, we were playing with the August 5th low, which was a major pivot within the overall NASDAQ. This was the crazy short trap candle over that yen, that whole Japanese yen bullshit that people tried to like sound like Albert Einstein about, right? And then it led to obviously shorts mitigating through just a really nice squeeze out leading into that holiday area towards the end of the year whenever the markets carried into the new highs into the elections. So AMD is still at that spot, right? We go over to AMD, it's still in that August 5th territory, right? We're getting these new lows, obviously stalling in terms of progress being made from sellers here. And we're kind of getting that like sell climax look on the daily chart where all of these new lows are kind of being bid up and AMD's remaining relatively strong essentially at these new lows, right? It all started here on December 20th, which was also the OPEX candle. And then we just subsequently made some lower highs. We made these new lows, and those new lows were obviously failing to displace aggressively beneath the old low, right? So we kind of have that like wedge look. I'm not trying to sound like a Jake Woogistic guy, but we have a lot of areas on this chart that make a lot of sense in terms of if we were to get that really nice big markup and that really nice strong looking earnings candle, and then we get a lot of consolidation within that area. I think that would be a really valid change of hands, and that would be a really nice opportunity to get long with the proper amount of digestion. So I'm looking at all of these charts. It's just they take a little bit of time. I'm not going to be taking any position on AMD until we get past the earnings. Some of the earnings candles that we could obviously play with need a little bit more time to digest properly as well. If we go into some of these other sectors like China, these need a little bit of digestion off of these resistance areas. I talked about Baidu. I actually gave a nice little buy note on this one here a couple weeks ago, and we already met our target one. And I really think China has a really good looking area on the chart in terms of like higher time frame confluences here with the Chinese futures and whatnot. We had a super strong leg within Chinese futures here throughout September of last year, right? And then we got really nice pullbacks into like the equilibrium from swing low to swing high, and then we started to obviously not get any like we couldn't break through and then base this area and then just continue higher. It wasn't really perfect looking. However, once we pulled a little bit more down, we made one more new low. That was kind of what initiated the whole entire move higher back to the upside. So we have some earnings within the Chinese names. I think we have PDD earnings here soon. Oh, no, we don't. But my favorite looking chart within China would still remain Baidu. I think we have actually Baba earnings is what it is. And we have some of the craziest volume leading into the earnings that we've ever seen within a name like Baba, right? This is the biggest weekly volume that we've actually had ever since all the way over here, March of 2023, right? And as you guys could see, I mean, in that area with that type of volume, Baba had their earnings. According to mine, it did not. But anyway, I mean, we could see with this kind of volume brings crazy amounts of volatility for a name like this. I mean, we had plus 17% on the underlying here for this week with that type of volume traded. Right over here, we had something similar, plus 10%, not quite the same, but as we could see, guys, this is just a really, really, really important report, in my opinion, for where we're going to be moving towards in the future, right? So I'm really interested in this Baba report just to see kind of what goes on here. Like I said, Baidu is in that 3. It's in the sell climax look with a really nice terminal. Baba earnings Wednesday, February 5th. Thank you, Brocco. I appreciate it, buddy. So with the Baidu chart, what we did, guys, was we just basically saw how we had a major floor of support here at 79.68, right? And what happened was they had a really nice gap up that was into this like daily resistance area. It never quite got to that gap, which is really had my focus over there. And then we actually got a gap down and really low volume sell-off that led us into like a shakeout candle here that was then reclaiming the area. And then what happened was we finally got a pivot, that pivot right through like all of this, like these gap areas, and as well as like kind of where we had this like 3-bar pattern here that was like really consolidated and really low volume. This candle right here was really telling in terms of where China was going to move going forward. So I just think with the most important China chart would be BABA, and Bracco actually clarified for that for me. I appreciate that. That is Wednesday. I don't know why my trading view says Monday, but whatever. Now we go into some of these other names, like we have some of the growth sector on watch, but there's nothing that's like I'm just going to trade blindly here moving forward. There's one chart that I like, but I would love a little bit of a pullback. That chart being Macy's. It's part of the discretionary sector, and I feel like this we did get a really sharp shakeout throughout most of this trading week. So with Macy's, it's part of that discretionary sector. There's overall consumers and retail that have been really nicely accumulated, right? Accumulated, and we had a huge markdown candle, which then led to a really nice intraday recovery, right? So as you guys could see, I had my alerts kind of marked all around this area, right? And then we took out the low, and then we're obviously getting some really nice reversion back here to the upside throughout most of these really ugly candles, right? I would like to see just a pullback or a lot of consolidation around this area just to see what Macy's can do, as well as the rest of the sector. And if they all remain relatively strong, then I'm probably going to be taking a stab at Macy's. Probably just some shares, though, because I don't really like the volatility on this name for options, so we'll see. What's up, Josh? PLTR and maybe CRWD distribution. Yeah, I'm going to go over CRWD here in a moment. Nike pullback on low volume and it's Chef Kiss. Yep, I love the Nike chart. And I got to go to the gym now. All right, I'll see you on some PUBG tonight, maybe. So now we go over into CRWD. Josh actually just mentioned this one. I actually would like this as a gap and go trade and then eventual distribution taking place. Obviously, this is a really nice, strong, constructive consolidation here, but we're playing with a previous high, right? And that's all we have to understand is that the risk to reward for a long side trade gets really bad as you revisit the highs. And this has been a really vulnerable long side trade ever since the correction all the way from the downside here, which was a really big time extension within crowd that left behind however many gaps behind, right? And then we just got that staircase higher and that really nice reaccumulation where big time participants were obviously incrementally buying this thing throughout most of this area, right? I mean, you're looking at this type of volume, guys, and then the following seller volume afterwards. There was clear accumulation that was building out throughout most of this area, and then it just really needed that like change of hands in the NASDAQ that happened over here on August 5th whenever we had that huge weekly trap candle. And then this reverted all the way back to the upside towards that high that started before the outage, right? Now, basically off of that high, as well as this previous resistance into the range break, we have 3 inside bars on lower volume than whenever we had a lot of the talks about this being the new rotation in the large cap, mega cap market, right? With a lot of these names remaining relatively strong. So I'm not going to be the one to just front run a short on this one, but I'm not going to be the one that also just blindly longs into the highs. So if we get a lot of consolidation throughout here, and this remains relatively strong despite maybe a gap down within the overall tech market, and this can remain elevated above this previous high and then properly absorb this high into the point where there's absolutely no volume traded on a lot of these days, then I'm probably going to be taking some sort of gap and go trade on crowd, and then I'm going to scale into that strength and just simply get out of it. This is not the best risk to reward. It's not the best looking chart. It's not the best looking name. But as far as if we get a major extended looking gap to the downside in the tech market, and then eventually what lines up is maybe a little bit of reversion back to that weekly opening gap, then this, I think, crowd, if it remains relatively strong with a few more inside bars, I'll probably end up trading this one for the upside. So that's crowd, PANW over here. There's not anything too special about this one. Basically what it's doing is it's just consolidating off of this massive weekly area. It's a really ugly looking weekly candle as well. So this is a very confusing part of the market where we just need to wait a little bit and see where more of the confirmation aligns from. Really ugly potential weekly lower highs. So I'm not going to really hold a lot of focus over there, but maybe just a little bit. Where more of my tech focus would obviously be weaker looking consolidation within Apple. Obviously Nvidia's in that area of the market where the chart is just like not very good risk reward at all. I don't really like it at all. And then Tesla would be my other tech focus. So yeah, it's basically Tesla, Apple, and then maybe crowd. As far as some of the other names go, Nike, top focus of mine. Starbucks, I want to see a lot of high tightness on this one. Kind of similar to crowd. I want to see a lot of relatively strong, propped, elevated price here within this candle above preferably equilibrium before I take a trade on it, because this technically could trickle down and everyone's trying to buy calls, and it basically just swept into the gap, and it's way too overextended from this gap sweep over here to the point where it's going to revert all the way back down into a gap fill, and then that starts to not look good at all. So I need to see extremely tight action up here, which would lead me to believe that we're going to draw higher into the bear gap before we start actually redistributing if we want to, right? And if you guys go to the weekly chart on Starbucks, it doesn't really look too bad. It's definitely a little bit overextended, no doubt, right? But we had a really nice break in that trend this week, right? And just this area of the market doesn't really look too bad. Like I said, the consumer names that are really building out really clean accumulations ever since summer of last year. So crazy amounts of volume on this peg, unbelievable. The amount of people that were actually trying to short this one throughout most of earnings are just, it's just beyond me as to why people were shorting this one. I mean, this is some of the craziest volume that we've actually ever seen of all time within Starbucks. Look at that type of volume right there, and then you go back, and the only higher amount of volume here was when we were at a $7 stock, right? So there was clear intention behind that markup is all I'm really trying to say. And then we got the proper amount of consolidation after this leg lower that obviously led into another markup, right? So very, very nice trade over there within Starbucks. Really nice higher low being put in here on the weekly chart. Definitely not a chart that I would ever think about shorting. I don't care that Kramer bought it. I don't give a shit. We'll go into some of the consumer names here now. MO, Jeff, I seen you talk about that one, and we did get past the report. Guys, I've been talking about MO for a very long time, and I'm probably going to be trading this one. This is actually part of my scan, Jeff, so I'm glad you brought this one up because I might have forgot about it. I was looking at this one previously, but we did have earnings, and this is one of those consumer names that are really, 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 really slow. But the premium is insane once you start finding a little bit of volatility, and you could catch a decent move on this that obviously exceeds what's priced into those premiums. Because guys, I've had unbelievable trades on this one where, you know, if I would have held some monthly swings on these, it wasn't even anything crazy of a move, but like it was in the thousands in terms of like percent gain. These could be absolutely insane risk to reward if you're just able to find that volatility. One thing that I will say with MO that we have right now is we have a really, really, really consolidated looking chart down here from in the January range, right? And then essentially what happened was we got our mark down from earnings. However, that markdown from earnings was really, really small. And what it did was it swept out all of these daily supports and it held this daily gap that was left behind around this area. So with that being said, basically what I'm looking for is for this earnings gap territory to obviously be a little bit more controlled. Obviously, we have our EMAs right around that January 31st high. And if we could obviously digest this range really properly, maybe get a pop followed by like a really nice higher low on top of that gap area, I'm going to probably trade this one to the upside. This is actually consumer. I believe this is consumer. What sector is this? I think this is consumer staples. Yeah. So we go into some of these other charts like PM. This is like the company that owns Zins. Really, really nice looking chart on PM. They have earnings though, kind of similar to like filling the gap and then getting back above that gap and controlling that area of the chart. This is a very high volume area on the chart with PM here. And once we finally get above that, it's a really nice move back to the upside. I'm kind of getting those vibes over here with MO, and these trades are really, really stress-free. Basically just looking for one weekly higher low above this previous higher low, and this could be an insane trade in my opinion. So with that being said, that's basically what I'm looking at over there. Not the cleanest of the cleanest on the weekly, but the daily, in my opinion, does look a little bit more telling. I'm going to need a little bit of time for this one to play out, though. So yeah, we'll see what goes on with that one. Now we'll go take a look at Target. No, it's not Target. Where is it? No, I already covered everything throughout this sector. Oh, Home Depot. This chart's a little bit speculative in my opinion, but I think that a lot of the discretionary sector is rotating out of some of these other names, and they're rotating into the basket that I talk about with like Nike, Lulu, and whatnot. If we get a broader market correction, I think Home Depot is going to be a decent short side opportunity. I don't necessarily know when, but if you guys take a look at this daily/weekly chart, we actually got a gap over the previous all-time high. And then what happened was once we started to fail through that area and slip beneath that, there was a lot of volume kind of pouring into the name as we popped all the way down here, followed by 3 weeks of consolidation, one more pop. Now we're pulling into the level that was failed from the swing high over here throughout December. So now we're getting a rejection bar off of that. This looks like a weekly lower high. If you guys go into the daily chart, they need to hold this area or it's pulling back into this bull gap 100%. It's some sort of head and shoulders type of look here on the daily chart, but I don't really care about the head and shoulders look. What I more and less care about is that this covered most of the sell side move, and now we're just kind of failing off of that area, and we're now basically curling up really tightly against like our daily EMAs as well. We're curling actually beneath the 9 right now, and if we start cracking beneath all of this like daily structure here and start really rejecting off of this area on the chart, I think it's pulling down into like 400 to 390. Obviously the premium is relatively decent over here. It's pretty spready. I don't even know if I'm going to be trading this one just because I'd probably rather trade with the strength in this sector rather than speculating on where the weakness will be, just because I'd rather trade a more of a liquid sector in terms of like if I want a short side trade, right? We go over to McDonald's now. That's obviously one of those names where I would be looking for the strength once again. I just need some sort of pivot candle that gets us above where this previous daily range was at, right? So if we could get a pivot candle somewhere within this range and get above like build up a little bit of momentum off of like this EMA test here, as well as like these really nice pop to the upside followed by 1, 2, 3, 4 days of consolidation that are pulling down basically into equilibrium. If you take swing low, swing high, not quite equilibrium, but around that area and just around an optimal area for a fill. If we could get that candle that pops us like back into reclaiming this range, as well as a pivot off of this bar itself, or maybe like one more sell day that eventually, you know, shows us its sign that it's ready to go, I think that could be a really nice long side trade as well. Just trading with the strong sectors, guys. That's all it really is to it. Nike's a much better trade, probably one of the best trades that we've had throughout the start of 2025. And basically, I'm just looking at the same stuff going on over here. If we could get a pullback or just a really nice consolidated range here, it's going to continue its way higher. And we have an 85 gap target for the upside, and eventually all the way up into 89 here at the fill of the entire gap. So beautiful charts in the consumer discretionary. We have some of these other names like Bros still on an absolute monstrous run. Absolutely insane chart over here. We go over into a different sector like financials. Really sketched out about financials again. Not saying it's going to happen just yet, but we have major extensions to the upside, a previously distributed range, right? And now we're revisiting that high in the sector itself, on the sector fund, right? We had a major extension previously to everything that tied into the distribution thesis over here, leading into FOMC. This is one of those sectors that is a little bit less liquid, right? So they're going to start unloading a little bit soon on this one, right? And that was obviously front running the fact of the broader market sell off of FOMC. And then what it did was it pulled down into most of the gap. It didn't fill the entire gap. However, we obviously got through the earnings reports, and that pivoted this back to the upside. And now we're in major overextended territory back into that previous high. So I'm not going to just short this one, and this is not one that I don't look at these charts and I'm like, oh yeah, I'm going to buy puts because we're at this previous resistance and we got our daily candle close beneath. No. That is not how it works. I'd rather get more confirmation on a true failure of the range, right? And then that would lead me to believe that this is going to redistribute once again all the way back down into this gap, or just the entirety of the gap fill all the way down here, right? Obviously, if this thing wants to continue its way higher with its current trend and its current character, then I'll just get more sketched out at the new highs, and I'll start really measuring how extended we are and how that could lead to some sort of like bigger schematic of distribution going on over there. Like I said, just not a confident read right now. It's just on the side watch. I'm just going to look at it every couple days. If I miss the short and it happens right into Monday, I don't really care. Yeah, that's the bank sector. I don't really think any of these charts have any true value in terms of looking for a long on these. We already read the previous distribution, so I don't really want to be giving back any sort of profits on that. I'd rather just wait for a really clear schematic to obviously play out over there. So with that being said, there's really not much more to talk about. Obviously, we have some of these industrial charts getting a little bit weird looking and not really being any trade. There's really no tradable names anymore over here. A lot of these are just too illiquid, right? We have some of the healthcare sector looking decent, but not its greatest. LLY would probably be my favorite chart in the healthcare sector, just because we have this really big time range being built over here. And what we did was we started to take out like where the previous weekly higher lows were at, and they were failing to obviously break beneath those. And then we got the retracements and the pullbacks, but I just never really got a clear signal in terms of daily chart alignment here with a lot of these charts. The daily chart just never really aligned. Does the chart look good, and do I think it could pull all the way up to the fill of the bear gap? I definitely do. And the healthcare sector has remained relatively strong despite a lot of the market weakness. So could this be a rotation happening under the radar? Maybe. Is it my favorite sector to watch? Not necessarily, no. Travel, I don't really like anything in the travel. We could go over into some of these other names here real quick. I'm going to flip through my stock list here. Lowe's, garbage, LLY, decent, JPM, not really too sure with JPM. I really do like the J&J chart, but yet again, just not really the greatest of names to obviously trade here. We had a really nice looking amount of volume here on this markdown from earnings, followed by a really nice hammer recovery on that intraday session, and it was a weekly higher, it was a daily higher low that was sitting above this daily support, right? And that daily support was actually like in some sort of shakeout. Whenever we had a take of, we obviously took out the daily support, we dropped beneath it, closed the candle beneath it, and then ripped back above into the earnings. What the earnings did was mark it down, and then just they reaccumulated it. They filled the entirety of the gap, and then pivoted it off of the top of the gap. So that was a really nice trade, and maybe in the future this one can set up a little bit more, unless it just continuously grinds its way back to the upside. If you guys take a look at the weekly chart, actually, this is one of those charts where you're getting those lows being absorbed, right? We had these weekly lows being the first one here, the second base here, and then the third base here, all being absorbed, right? So we have a lot of room to the upside. I'm never buying shares in the healthcare sector again. So I don't have anything here. I never traded it as of lately, and I don't know if I'm going to, but that was a standout, like, relatively strong name as of lately. So everything else has been really, really weak, or just really, really consolidated. Just nothing really too great to watch, nothing too great to trade. I'm going to cover what my plan is for QQQ here in a moment, and then I'm going to jump off. With QQQ, I think we're going to get a gap down. I do. If we get that gap down, I think that's eventually going to lead to a long side trade, probably into mid to end of week. If we could start revealing a lot of strength maybe on Wednesday, if we get like a 2-day sell period, if you guys go over to the S&P, if we could get a sell, if we could get a really extensive gap down, that gaps us down about 6 to 7, maybe 8 points. I know that's a lot to ask for, but if that were to happen, and then we start developing some sort of sell clapbacks, there's going to be a lot of areas to along this short-term perspective if we started to get some of these sell climaxes happening into the bottoms of these gaps, right? Which would lead us back to like maybe where the unfilled, untested gap was actually started from, right? So say we gap down into like right around here, right? And then beneath, maybe we sell off a little bit more and we get a little bit extended to the downside. There's been a lot of buyers within some of these gaps. So if we were to obviously be able to like gap down into here and then start finding those lows being absorbed, some sort of intraday sell climax into the entirety of the gap fill, and then we start building out like structure for the upside, and then we can obviously pull more into where that new week opening gap was sitting at. So that would be something that I'm going to be watching. Really ugly candle as of today. I don't really want to be rushing any sort of long as of right now, just because I feel like a large amount of sellers have been filled throughout this candle right here on this red to green day, and this was very violent price action, guys. I mean, look at the volume leading into this close. Look at the daily volume relative to the rest of the range, and look at the gap down and the volume behind that. I mean, this is dominant from a distribution perspective. It really is. So obviously stepping up to the plate in terms of a long side trade, the fills would have to be absolutely insane. You would have to be able to find an area on the chart that has really measurable risk to reward. You could pull swing low, swing high, start looking at discount, and it's actually damn near that gap fill. We also have a big time buyer that's starting to potentially layer the market sub 590. So if we were to get a really extensive sell side move, I'm probably just going to trade that back for the long side towards the end of the week, or maybe in the next week. So that would be SPY, and my plan with SPY. I could try and update Twitter on that one, but I'm not really too sure. Starbucks, I'm really interested in the PLTR earnings. I'm going to talk about this chart real quick, and then I'm going to wrap things up here. PLTR. This one is just insane to me because we're getting a crazy amount of exhaustion happening towards the upper area of the trend, right? And now we're leading into the earnings. So if we get a gap up and we get something similar to the Apple move, which was a green to red intraday move, actually, that would be a fantastic signal of distribution, obviously taking place within Planeteer, right? We go over to Planeteer, we're actually just ever so slightly making a new high, and we have earnings Monday after hours, right? So when we have the earnings after hours Monday, and then we start seeing maybe this gaps up ever so slightly, it doesn't really meet the implied move, and then it sells off with a really, really ugly looking candle at the top of the trend. I mean, this is building out a distribution, and it's going to recorrect really, really badly, really harshly. And you're probably going to start getting news. You're probably going to start getting a lot of these exit liquidity headlines that start entering into a name like PLTR, because it's just such a retail favorite that it's going to be a mean distribution, and it's going to happen quick. Obviously, that's all pure speculation until we get through that earnings, until we get through that report. There's a lot of dumbasses on Twitter that say like, "Oh, you called for PLTR distribution." Yeah, I did over here, right? And now this is pending more from a weekly schematic and not really so much a daily schematic, right? We already did sell from where I was actually bearish PLTR from. Did I catch that? No, but I don't really care because the bigger move could be initiated through an earnings UTAD, and it's an earnings UTAD potentially. If this were to be an earnings UTAD, I know what is happening. I just know it. I simply just know. And I'm telling you, it is a distribution. People always make fun of me for calling out a distribution until they're blatantly fucking wrong, and I wipe my balls across their forehead. And that's going to be the same for PLTR here. If we get like I said, a red to green type or a green to red type of candle that closes beneath and then it starts developing lower highs, it is a disgusting distribution. And I just I can't believe people fall for that kind of stuff. It's true. I'm not trying to be an asshole. It's just like people called me a clown talking about distribution over here in Nvidia, and then it led to a 17% drawdown. You know, of course they were hedged with a short. Banana stocks. You know, a lot of his army came at me like, "You're fucking retarded." Okay, buddy. Yeah, let's see. You know. It's always fun and games until, you know, Nvidia drops 17% in a day and everyone shuts the fuck up. It's kind of how it works in the finance world. So yeah. With that being said, Apple, Tesla are my two primary focuses in terms of just intraday, day by day volatility goes. With Apple, like I said, what I would be looking for is the overnight gap lower high range. If we were to get a gap down, are you using high open interest strike prices? What? How did you see the seller at 610s the other day? I told you that. I quote retweeted you on that. We had a big time seller up here, sub 608 on the dark pool. We also had a lot of sellers that were not filled in this huge gap down. We also had a really nice reversion to fill that gap, leading into more data sets, into more earnings reports. We had a pending distribution without its 1 week LPSY on Apple. That's why whenever you get into liquidity driving events like the earnings report, and there's a lot of imbalanced areas within the sell side trend that actually initiated the distribution, that's why they pop this higher. They get more committed buyers now that Apple is in its, you know, oh my gosh, 3% markup. I'm just going to chase this, dude. And then they just unload more and more and more as they can, right? Because maybe they didn't get enough fills, and that's why Apple went completely vertical for the downside, right? It went completely just no consolidation, right? So there was no area in which this could have been like such a there was no area in terms of where big money could have really filled at, and actually where the distribution was starting from was within this consolidated area, right, which led into just an exhausted top. The distribution might have not even started yet on Apple. Do we see any crazy area in the volume profile that tells us that a major big money unloaded this name? No, we really didn't. We really did not. What we more or less saw was a really extended grind back, to all the way to 260, and then eventually just exhaustion from the top of the trend. They needed an event to unload more off of. I don't understand how people fall for this shit. I don't understand how people look at these charts and they're like, oh my gosh, a 3% markup, the distribution is over, dude. No, it is not over. No, right? And we never got a 1 week LPSY. What the LPSY is, guys, it's a failure of the initial breakout level, which then leads to a recorrection lower. And then once they obviously pop it back higher, this could be where they drop it and start pressing aggressively beneath where the initial breakout level was sitting from, right? Go look at a distribution schematic and look at the LPSY within a Wyckoff distribution schematic. It is always around this area on the chart, right? And earnings is the perfect opportunity to be able to do so. There's not a crazy amount of volume on that. Don't get me wrong. However, I don't think the distribution is over. I think Apple's eventually going to go reach 198 to 200. Maybe if I'm being a little bit more generous, I'll call it 214, 215, 220. I'll call it 220 if I'm being really generous and realistic here with price targets for Apple in the future. But this chart just simply looks like ass. And if you're stepping up to the plate as a buyer here, I'm going to say a prayer for you, man, because there is a million better long side trades that have so much better and more reliable areas of risk levels that, dude, if you blindly bought this, I truly feel bad for you. And I'm not trying to be an asshole. I'm just trying to teach the proper way. So, there's not really much more to talk about, boys. I mean, if you guys have any charts in mind that I'm forgetting about, because I did mention some other ones before the week's end, then I'd be glad to obviously hear about those again. Oh, IWM, huge area on IWM. So with IWM, guys, is this going to be where the preliminary level, where the preliminary breakout level, where we fail off of essentially, right? What we did was we built up a massive breakout level, huge, huge, right? And then what happened was we actually got a gap up through that, a retracement, a higher low within the gap, a new higher high. That higher high was failing to base the old highs. And what it did was it just popped up into this previous high and then it just got fucking wrecked. So we made it all a new all-time high, and then we sold off really aggressively from that. Now we're looking at potentially putting in a lower high off of 228.63, right? If you guys go to the daily chart, we have an unfilled gap remaining all the way down here at around 220 psych. Really ugly looking candle here leading into Friday, as well as a lot of consolidation off of this range that was just covering a lot of the imbalance from the FOMC candle itself. I'm honestly going to go out on a limb here and say this one actually starts breaking down from weekly structure perspective, and I think IWM is eventually going to reach all the way down into the low 200s. Could I be totally wrong here? I could. Am I probably going to trade it? If we don't get a really gross gap down into the new week, I probably am going to short this one. I'm sorry. I just chug a water. I'm trying to hydrate. So, yeah, IWM is a very big spot in the market as of right now. When we go into the daily chart, we can kind of see how there's just a ton of consolidation happening around this general area, with a lot of the volume actually being from like to the downside here throughout most of these candles throughout this range, right? So if we could get like just a simple weekly lower high, I mean, this one is going to pull back into that gap and then obviously retest into this higher time frame trend line, and we'll see what happens from there, right? But as of right now, this chart does not really look good. It just simply does not look good. And now we could be losing our EMAs on the daily. So that would be people look at this as like a really nice multi-day base above the EMAs, and it's a long side trade, but that's just not the environment to really be in right now. I'd rather short pops rather than long drops personally for this market. So obviously my long side trades have just been in the sector that has and has remained relatively strong. Ford, I'll go check out Ford here in a moment. This is earnings gauge. So with Ford, I own shares on Ford. They're red. They are red. I knew the 50 was sitting there because I remember looking at this. I mean, this comes down to earnings, and if it was able to pivot off of this range on the chart, I mean, this was a support, turn resistance. It pushed us into like this support over here. This support was actually a sweep of this low. I mean, I would like to see like some sort of like kicker candle off of this area, and eventually and just above this like gap resistance range. I mean, that's just gap resistance as well as a bigger, higher time frame level to watch there. Lots of volume actually last week on this one relative to the rest of the range. Obviously, with that kind of volume, we can see the volatility that has previously been there. Minus 19% here on Ford with that uh, amount of volume, right? Over here, it was, what is that one? That one isn't as much, but you guys can kind of see how this one is really dependent, in my opinion, off of like what the earnings does. Because if we do get a strong peg here, Gage, for the upside, it's going to pull back into the gap. This bottom end of the chart would be too big of a change of hands if we had a really strong earnings bar to the point where if we got a lot of like a high tight flag, if we got like a lot of consolidation on a peg, right, like a big markup and then a path of least resistance, it would eventually reach 12. And that would be a beautiful long side trade, and I can envision that in my head, but it's just not in front of us to trade right now. So, yeah, that's Ford. Does anyone else have any questions here in the Discord that want answered? I mean, there's not going to be a TSM. Oh man, TSM. I haven't looked at this one in a while. Uh, the chart looks like shat, but there's a lot of volume. Um, oh man, I mean, I would never short this one. I think we're in distribution. I'm gonna go out on a limb and I'm gonna say we're in distribution. I actually previously talked about this one being a UTAD into the earnings. I thought this was the UTAD. That might be the UTAD. That might be the top, which would then lead me to believe that this thing is getting wrecked now for the downside. Um, oh man, this is such a hard chart to think about because, like, dude, all right, well, we have an unfilled gap here, okay, and we have like a lower high here on the weekly. And we have a big time level as well over here. I mean, the chart doesn't really look too great for the short or long side. Long side looks worse in my opinion, but there's so much volume behind that candle. And like now we're getting the exhaustion move above the candle itself. I mean, I'm gonna add this one actually. Thank you for mentioning this one. This one's actually going on the watch list. I'm gonna put this one on the watch list with here. I gotta add MO. I'm gonna add. Do I have Macy's? I don't. I'm gonna add that one. These are all just side watches as of right now. Like Disney, for example, here, guys. Like we have earnings this week. Beautiful trade previously, but we have to wait for the earnings, so we're just gonna cancel that one out there. MU, it's just not ready yet. PLTR, I mean, that could be a monstrous short. Starbucks need a little bit of high tight flag action going on over there. Home Depot, just a side watch for me as of right now. And more of my main watches are going to be Tesla, Apple, and just the indexes. I'm probably just going to be range trading the indexes for a little bit of time here. LRCX, I mean, I think the chart looks absolutely fantastic over here on LRCX. We just got a really nice pop in volume here for this week, the highest volume that we've actually had ever since leading into the holidays, and now we've actually closed this successfully above the resistance here at the $80 psych. I want to see how this candle digests and what happens here, because like this one's hard to it's hard to really give a directional read on this one right now because you don't want to be longing into the highs, into chasing the earnings move, right? But you also don't really want to be shorting a chart that looks like this on the weekly, with obviously contextualizing as to where we are as far as like the weekly chart goes, as well as just like we got the lower low, like the sell climax look, right? This is 1, 2, and then the third, right? And that was all just a failure to displace and become a failure off of this level, which then leads to a spring back to the upside and a lot of fuel for the upside. And the amount of volume that we've actually had within this range ever since the sell-off into it, which was July 29th. I mean, guys, we've had a crazy amount of volume traded in that, and just a lot of range built up within that area on the chart. So when this thing is actually ready to go, 92 is an upside target, which is 11 deltas above where we're currently at. Premiums aren't bad. If that were to hit on a swing trade on just a few months of time, dude, that would be insane. That would be unbelievable, right? I just think we're just in a little bit of an illiquid market where a lot of the attention is going to be pulled away from the tech charts, and it's going to result in some of these other names catching a little bit more volatility. Obviously, names that don't need to have as much money to move as well. You guys have got to think in terms of like the float size and the market cap and how things move, right? And if there's a lack of participants in terms of the bigger market, then you're going to get a little bit more of an edge trading the smaller names, if that makes sense. I I like that chart. I really do. I also really like QCOM, but there's earnings, so I mean, we really can't. There's really not much to talk about in terms of like a bigger watch list. It's got to be a smaller watch list if you trade the liquid leaders, or you're gonna get smoked. You're gonna get really toasted, right? So primary tech, AMD after earnings, Apple, Tesla. Maybe Nvidia at some point, but as of right now, you can't short the hole down here with this gap above you, and you can't long how shitty of a chart this is. I mean that is horrible. This is a horrible looking chart in terms of like being long on this. It's so bad, super bad. If you guys long this blindly, I'm telling you, you're gonna go poor. And I, dude, I'm just not even gonna rant about this one, but it's really embarrassing as to like how many people like throw risk reward out the window and think that there's like a new revolution happening into the highs when Jensen is talking. It's just insane to me. It's just mind blowing to me. So I'm gonna do a little bit of Q&A now here in the general chat. If you guys have any questions, feel free to type or just give me a chart and I'll chart it out and just see how I think about it, because I might be missing a few areas in the market that look really good. Obviously, we have some of these other consumer names that have already been running. So as far as like MO goes, if we go into the sectors list and we take a look at some of these other names, I mean, here's your sectors list. Like we had some reports coming out, we had some other names not really showing off anything just quite yet. We go over into like KO. Cost looks fantastic. Pepsi, really not so much, but we have earnings on the way. Walmart on a crazy, crazy, crazy run. I think MO is your best looking one. I mean, I just like the spot. I like the risk to reward. I like the premium. I like everything about MO. ARKK, growth has been relatively strong, man. This ETF has too much exposure to Tesla for me to give a clear read on it, because I've already explained Tesla and how I think about that one. I mean, could it be a UTAD? It technically could, but you would technically need Tesla to be a UTAD. Is Tesla a UTAD? I don't know. Is it? I'm asking you, Jeff. I don't know what the hell Tesla is right now. I wish dude, I'm getting these horrible stomach pains. I think I'm dying, guys. KDP. KDP. I missed it, but just let me hear it. Dude, I think we all miss Roblox, brother. Roblox is crazy. And I talked about, if you guys go back and you look at my OG scans, I talked about how, when you're looking at an SOS from here and you're looking at a gap fill target all the way up into here, right? That's a realistic target for how explosive this accumulation base could be. You guys got to remember that. This is an accumulation base that's been going on for multiple quarters, multiple years. Once you find the expansion in the SOS on top of the range, guys, it's a retarded risk to reward. Like right over here. Unbelievable. And you're looking at your returns with what your risk would be a failure of that level, about 10%, call it. Look at your upside reward. 50. 50 as of right now. I mean, guys, in terms of just setting aside money and throwing those in shares and coming back to it, it's a lot harder to obviously I'm sorry, I just zoned out. Zom, gotta let the earnings candle digest properly, my guy. There's no way of really telling what's going to happen. I know dealers flipped long energy throughout most of like the December OPEX window. This was a trade that was a lot more vulnerable long side. I was in calls mid-December. I mean, yeah, we all really like the chart. It's just, are we able to properly trade that with an option contract? Probably not. And like that's why I don't really care, guys. I truly look at the Roblox chart. Like I just don't care like at all. Like it's insane, and like I knew they was gonna do this, and like I just don't care that I didn't catch options on it. You guys go over into some of these other names. What's like CVNA doing? And like, oh, I'll add one more chart to my watch list for this week, just in case we get a growth pop. AI. I really do like AI in my opinion. It's a nice looking chart. I mean, look at the weekly here, guys. I like it. I really do. I just think we're in an area here where the volume's not necessarily telling. It's really not. And I don't like the volume profile in a name like this because we have so much volume throughout this range. And the volume just really dies off throughout the rest of the range. And I don't know. I just I like the structure of price here. I like the pullbacks. I really like how this one's behaving off of like this daily base, but we need that spark candle. I hate publicly talking about these charts because people blindly long them. And I just don't there's no point in messing with this name unless you find that candle that it's like a quick spark to the name that adds a lot of fuel, right? There's no sign here on this chart. It's just a really nice pattern of structure and price. If you're looking at EMAs or you're an EMA guy, it's totally okay. It's just you need a pop above them, right? You need a pop above those. You might need a little pop above the trend line. You just need something that gets this thing going, right? Just something. And I don't know exactly if that's coming, right? But we have a big time level here on the daily chart around this general area. And we're basically just looking for an LPS within an accumulative looking range. Are we going to get that? I don't know. And I'm not front running that. I'd rather scale into a little bit of strength on this chart rather than just blindly longing this down here. I mean, guys, think about IV and how that correlates with how price has actually been moving. This is a really coiled up chart throughout most of like January. So, we would technically need a break of structure on a daily time frame, which is basically just this daily support. It turned into a resistance, and we need that spark candle that gets us above it. if that happens, it could be a fantastic trade, and you don't need to be the first one to fill on this one and get a win. That's the beauty of these names, that when they get going, you don't need to be the first. It's a wide enough amount of volatility to be able to capture a move after just one plus 10% days, let's just say, especially with like an inside bar too. So don't just front run this one, please. I beg you to not front run this. You would probably get absolutely toasted. Let's just wait and see what AI does in the future. I mean, it could sell, it could get shit on. I don't care. It's all to be determined. AFRM, I mean, really nice retest. It's going to be hard to execute. Um, it's kind of trying to base these previous daily levels around here. When you guys take a look at like your EMAs, it's basically reclaiming above those today. I think AI is another one that has an interesting look and a little bit more of a signal as we speak than, or I'm sorry, AFRM. I think it has a little bit more of a signal as we speak about growth rather than like your AI and whatnot. But it's basically all there really is.